What is up guys, my name is Ignas, welcome back to the channel. Today I would like to make an analysis on our largest holding on eToro, which is PayPal, ticker symbol PYPL. Currently on the year to date the stock is down for 20.75%, and if we take a look into the performance of 1 year, it is down for 15.67%. Currently the price is at $183 and it is almost at the 52-week low, which we had just a week ago at $179.15. On the other hand, just 6 months back, we had a 52-week high of $310.16. So today I want to take a look if PayPal is worth adding at these levels, and to do that we will check the recent Q3 earnings, then the revenues and financial ratios, after that analyst price targets and superinvestor capital allocation, then we'll check the technicals of the price chart, and lastly I will share my position on it in the eToro portfolio. But first let's briefly check on what the company does. PayPal operates as a technology platform and digital payments company that enables digital and mobile payments on behalf of consumers and merchants worldwide. Its payment solutions include PayPal, PayPal Credit, Braintree, Venmo, and others. The company's payments platform allows consumers to send and receive payments, withdraw funds to their bank accounts, and hold balances in their PayPal accounts in various currencies. It also offers gateway services that enable merchants to accept payments online with credit or debit cards as well as digital wallets. A month back, PayPal reported Q3 earnings, and investors didn't really like it. They did report a 13% increase in year-over-year revenue, but unfortunately had disappointing guidance for next year. So on top line, they missed analysts' expectations, bringing in $6.18 billion in revenue versus the $6.23 billion that was expected. And then on the bottom line, they brought in $1.11 in earnings per share, beating analysts' forecast at $1.07. Some good news came in with the report. For example, PayPal's Venmo app saw payment volume jump 36% to $60 billion. US customers are able to use it to buy, sell, and check out with digital currencies. This means that PayPal is positioning themselves to be a rival for Coinbase, which is currently the most popular crypto exchange in the US. Additionally, starting next year, PayPal users with Venmo accounts will be able to make purchases on Amazon.com and Amazon mobile shopping app. But then comes the poor guidance for the next quarter. So PayPal sees earnings at $1.12 per share on net revenue between $6.85 billion and $6.95 billion. That fell short of analysts' expectations. As for the next quarter, they see $1.27 in earnings per share on $7.24 billion in revenue. And then revenue guidance for the year was lowered 18%, putting it in the range of $25.3 to $25.4 billion, where analysts expect $25.78 billion. So PayPal did fall short on revenue expectations, but that was still a year-over-year increase. Let's check what revenues have been in the last 5 years. And we can find a very decent graph on the trailing 12 months. It was very consistently increasing every quarter. So for 2016 we had just over $10 billion, then in 2017 that was over $12 billion, 2018 almost $15 billion, then 2019 $17 billion, 2020 was $20.3 billion, and we currently have $24.6 billion in revenue for the trailing 12 months. The largest year-over-year increase was in Q1 of 2021, up 30.64%, and the lowest one was still over 10%, that was in 2019, up 11.62%. Now let's check on the price to earnings. So here we again got charts for the last 5 years. Back in 2016 the PE was at 36.26, then 1 year later it went up to 50.02, in 2018 that was at 51.07, then in 2019 we had a small drop to 48.63. After the initial drop in the beginning of 2020, the share price recovered nicely and we had a PE ratio of 74.35, but we are recently going lower, and the price to earnings is now at 44.21. So in the last 5 years, the lowest price to earnings that we saw was 34.32, which was back in 2016, where the price was just under $40 per share. And then the peak was in the middle of 2020, where we had the PE at almost 80 with a price of $174.23. But we can find that by the end of 2017, through 2018 and through 2019, the PE ratio was right there at around 50. And at the current price of $184, we're getting it 10% lower at 44. So in that way, it seems quite fairly valued and even a bit undervalued right now. Another part I want to check are the shares outstanding. So back in 2016, that was at 1.2 billion shares. Then in 2017, there was a small increase to 1.22 billion, but after that we had a 2% year-over-year decrease to exactly 1.2 billion shares. Then in 2019, another year-over-year decrease of 1% to 1.19 billion shares. Then to 2020, it pretty much stayed flat. And for 2021, we have another decrease for 0.25% year-over-year. So we do find that there were some small increases in the number of shares outstanding, but overall those decreased in the last 5 years from 1.2 billion to 1.19 billion shares. Or otherwise, it suggests that they bought back around 27 million shares, which at the current price of $184 would cost almost 5 billion to get. So in this case, it's a huge plus for bringing value back to shareholders. Now let's check what analysts think the price for PayPal should be for next year. So we have 45 targets ranging from the lows of $175 to the highs of $366 per share. The average is at $281.04 and the current price is at $183.56. So on average, analysts think that for the next year we should get an increase of 53.1%. We can also take another angle. So analysts think that for 2020 they will bring $5.28 per share in earnings. If we assume that the PE ratio remains the same, then we are looking at a price increase of 14.5%. So overall, analysts do predict that the price should be higher than it is right now. Now let's take a look what Superinvestors are doing with the stock. So we have two portfolios where exposure is over 10%, one with 4 million shares that reduced exposure by almost 5%, and another with 568,000 shares where they added 3.62% on that. Then we have a portfolio with over 12 million shares in, where they reduced just 0.01%, and then another with 6.9 million shares, and they did add 3.04% on that one. So it looks like that Superinvestors are currently a bit indifferent. There are both buying and selling pressure here. One thing that does bother me is this insider buying selling in the last 6 months. So it appears that in the last half a year, insiders did 6 large buys for just over $2 million, but sold 49 times for over $24 million in total. So on one hand, insider selling could signal that even they think that the stock is overpriced, but on the other, it could be some issues that we are not aware of. I hope that it is the former and they will start buying back in when we bottom out. But could the bottom already be in? We had this first decent drop recently just after earnings, and for a few trading days the relative strength index was under 30. Then there was some relief with the stock price going up, and we almost had a bullish crossover in the MACD lines. But after that it was again bad. We had a few large red candles and the relative strength index going back under 30. But now with the second day of December, we started seeing at least some strength. The relative strength index went just a bit over 30, and we had a bullish crossover in the lines of the MACD. Now as of Monday, the relative strength index is still moving sideways, but the 12-day moving average is going up and further away from the 26th one to the upper side. The things that still concern me are the moving averages, and especially that blue line, which is the 50-day one. If it keeps dropping, it could be acting as a good resistance, and we could still see more selling after that. But even though we could still go lower than now, I already bought more on December 1st. Now let's go to check these moves on eToro. So PayPal is currently the largest holding that we have on eToro, and we are unfortunately down on it. The first long trade that we added was on October 21st, and that was $100 at an opening price of $246.99. We kept on buying as the price was going lower, so the latest trade was on December 1st, where we again added $100 at an opening of $187 per share. Unfortunately, the current price is again lower, so all of our positions are now in the red. To sum up, we now have 6 long trades or $600 invested at an average opening price of $218.57. This means that we are currently losing 15.18% or minus $91.08, and that makes the value of this position at $509.03. Now let's do a quick recap of what we learned. So on the third quarter report, they did miss on revenue expectations, but beat on earnings, but then unfortunately gave poor outlook. Even though revenue missed expectations, that was still a 13% increase year over year, and revenues have been on a consistent increase for the last 5 years. With the recent decrease in price, the price-to-earnings ratio has also come lower, and we are currently at the levels that we had back in 2018-2019. The number of shares outstanding are decreasing, so it seems that they are bringing value back to shareholders with stock buybacks. Analysts predict that the share price will be up in 1 year between 15 and 53%. Superinvestors are currently indifferent. Some portfolios are increasing exposure, while others are decreasing it. But I believe that insiders selling the stock is not a great sign. The price has been moving sideways for a few trading days, and the MACD is already showing some strength, but we are still oversold in the relative strength index, and the moving averages are still going lower. So I'm not yet sure that the bottom could be in. And that was it. If you got value or new ideas, then make sure to push that thumbs up. It helps the channel a lot. So what do you think? Should we be buying PayPal right now? Share your stance on it in a comment below. If you are interested to know exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I did a stock analysis on Alibaba, so if you would be interested in that one, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.